Welcome to this deep dive. We're looking into a way you might create predictable income for life in retirement and also get some principal protection.
Mm-hmm.
You shared some info about the National Life Group Income Driver 10 Annuity from Diversified Insurance Brokers. So our mission today is really just to understand what it offers based on that material.
Right. And just to reiterate, this isn't financial advice. We're purely exploring the features described in the information provided.
Exactly. We're just digging into the details.
Okay. So the basic idea here is converting retirement savings into a predictable income stream, something you can count on regardless of market swings, plus protecting that initial investment.
That's the core concept.
Yeah.
Security and predictability in retirement.
Precisely.
A foundation.
Now, a big piece seems to be this guaranteed lifetime income rider, the GLIR. I see there are two kinds, standard and no charge.
Yes, that's right. The key difference is really in how your potential income gets calculated initially and, well, the cost.
The standard GLIR gives you an upfront 25% bonus for that income calculation. Plus, there's a simple 10% annual roll-up credited to that income base for up to 10 years. But it comes with a 1% annual rider fee.
Ah, okay. So a fee for the bonus and roll-up and the no charge.
The no-charge GLIR, well, it skips that upfront bonus and the fee, but you still get the 10% simple interest roll-up for up to 10 years.
I see. So it's a trade-off then. Potentially higher income sooner with the standard but with a fee versus no fee but no initial bonus with the no charge.
Exactly. And both let you decide whether to start taking income immediately or, defer it.
And when you do start income, there are payout choices too, level or increasing.
Correct. You can choose a level payment, which stays the same for life, or you can opt for an increasing payment. That one starts a bit lower but goes up by 2.5% compounded each year.
Why offer both?
Well, it caters to different needs. Level income offers maximum predictability from day one. The increasing option, though, that's designed to help combat inflation over, say, a long retirement. It grows until the account value depletes, and then that higher amount locks in for life.
Okay, that makes sense. Now, this income doubler feature caught my eye. It says income could double for up to 5 years if you can't perform 2 of 6 activities of daily living.
Yes, that's a significant protection feature. If you meet the conditions like being unable to perform 2 ADLs and the certification requirements, your guaranteed income can double for up to 5 years. It's really aimed at helping cover potential increased costs like health care or long-term care expenses.
That seems like a powerful safety net.
It can be, yes, a real buffer during a difficult time.
Okay, let's shift gears. How does the money actually grow before you start taking income, the accumulation phase?
Right. So you have choices there, too. You can allocate your premium to different crediting strategies. Some are linked to market indices like the S&P 500, the PIMCO US Fundamental Balanced Index, or the Societe Generale Global Balanced Index. Or you can choose a simple fixed interest account.
Linked, but not directly invested, right? So you get potential upside, but protection from downside market losses.
Precisely. Interest is credited annually based on the index performance using methods like point-to-point or monthly sum caps. These involve things called participation rates, which determine how much of the index gain you might get, and caps, which limit the maximum potential credit. It's designed for potential growth tied to the market, but without the risk of losing your principal due to market downturns.
And I saw mention of a rate booster.
Yes, that's an optional feature you can add for a fee. It aims to potentially enhance the caps or participation rates, which could lead to higher interest credits in certain scenarios.
Got it. So choices for growth potential with built-in protection. What about needing access to funds? Is it locked up tight?
Not entirely. There's flexibility. First, there's a dollar cost averaging or DCA feature. If you put in a lump sum, you can spread it into the index strategies over time, potentially reducing market timing risk.
Okay. And withdrawals?
Starting in the second contract year, you can usually withdraw up to 10% of your accumulation value each year without incurring withdrawal charges or market value adjustments.
10% penalty-free annually after the first year. That's good to know. Are there other exceptions?
Yes, there are waivers for certain significant events. For example, if you're confined to a qualified nursing home or diagnosed with a terminal illness, you might be able to access more funds without penalty. There are also specific hardship distribution provisions for certain plan types like 403Bs and 457Bs and some emergency access waivers under specific circumstances.
So some important safety valves if life throws a curveball.
Exactly. They recognize things happen.
And what about when the annuity owner passes away? What happens then?
The remaining accumulation value is paid out to the named beneficiaries. Importantly, this payout is generally free from withdrawal charges, and it typically avoids the probate process.
Avoids probate. That can save time and money for the beneficiaries. Right.
Yes, it usually means a quicker, more direct transfer of assets compared to assets that have to go through court supervision.
Okay, so let's recap the basics. This is generally available for people aged, what, 45 to 85?
Correct. Those are the typical issue ages.
And the minimum premium is around $25,000.
That's the usual minimum, yes.
And it's offered by National Life Group. You mentioned their history and ratings.
Right. National Life Group has been around a long time, well over 170 years, and they generally hold strong financial strength ratings from the major rating agencies. That history and financial stability can offer some peace of mind regarding the company's ability to meet its long-term obligations.
Okay, so pulling it all together, the National Life Group Income Driver 10, based on this info, seems designed to offer predictable lifetime income, principal protection, potential for growth linked to indices, and several flexibility features like penalty-free withdrawals and waivers.
That's a good summary. It combines several elements aimed at addressing key retirement concerns: income longevity, safety, and access.
It really makes you think. Considering your own retirement picture, what part of having a guaranteed income stream for life really clicks? Is it just the predictability or something else? And how does a feature like that income doubler maybe change how you think about long-term security? Something to chew on, definitely. How might these pieces fit your own specific situation and, well, your goals